Daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
Morning, everybody. Dan, how you doing?
Good. Good morning, Troy. Good morning, everybody. Welcome.
Welcome. Hey, gold. We've made mistakes as traders, and we should have just been buying gold the whole time. You know, we sit here talking about trading all day. Just buy gold this year. It's pretty simple.
Forget stocks. Just GLD.
Gold up. Gold futures up 50 this morning. 54.
Wow.
As we speak, well over 4,000 at this point.
Yeah.
You know, and I love gold.
Yeah. Isn't it amazing when, I mean, we think in our thoughts we have control of the market, or a little bit we know where things are going, and it just proves, you know, like right now, people are like, you know, when you see pundits, CNBC or whatever, the market needs to go down. It's like giving a stern, you know, it's gone up too far.
It has to.
It has to go down, or gold, you know, and that's the beauty of a market system. I mean, people want to go to the next thing, right, and say, well, it's controlled now. It's a conspiracy, and who's ever controlling it. But it's just, you know, what it's really saying is it's tough for us as traders to be patient, isn't it? And just wait. You know, I was saying yesterday, you know, with VIX at 16. I think it's 17 now, but, you know, 16 and a half area, we're not going down. Wait. But to tell people, you know, if VIX is, you know, 14, 15, 16, you can argue touching 17, there's not much down action. Wait, right? But we want to be predictive in nature, right? We want to, and part of that is okay, but that's where I think, like you talked about the other day, Troy, with speculative trades or the tail curves, you know, buying puts or something. You know, what do? We don't know. You know, will we have a decent down day or two in the next month or month and a half? Probably. But the more you extend your duration, the odds will go up that we will. So it's, don't put, if you're going to, you know, buy puts, don't go buy them 3 weeks out or 2 weeks. If you want to, you know, get some distance, I think you talked about buying December, right? Get yourself out there a little bit. You can at least, you know, handle it. Anyways,
I bought December, yeah, and Dan,
they
certainly go down. Yesterday, every once in a while I have this habit, and I can't. The hard part at this point is I can't tell if it's a bad habit or a good habit, but sometimes I'll see my deltas get a little too positive for what I want.
Yeah.
And you can kind of read a little, I mean, this is the bad habit part, or a little bit, you can kind of get a sense that we're going, the actions maybe leaning lower for the day. And for me, I mean, just that's market profile, just reading market profile.
Sure.
You get a sense sometimes. Well, I got neutral, and you know, I had a bunch of DCs that were in the month, 30 points in the money. Now they had time, so I wasn't worried about it. But they were going down, so I got neutral, and I was up on the day. And if I would have closed those, it would have been a great day, really a great day. But I scaled out, and the hard thing with that sometimes is, you know, you get to. So like right now, basically, I have a long ES future and a couple ES puts. The Greeks are interesting on that because, you know, you have a lot of juice when you first do that, especially if you have a couple puts.
Yeah.
but man, time is not on your side. They're short dated, and so they expire today. And I
Okay.
mean, we didn't do anything overnight. So the bad part is sometimes you kind of get analysis paralysis
Yeah.
with that discretionary, and you know, this is why I love automation, honestly, because you can really sit there and just I'm just in this trade too long. I should have got out yesterday.
Right. And that's, yeah, that is such a prevalent problem. Paralysis. I mean, we're all guilty of that. And that's why sometimes it helps at the beginning of a trade, while you still have a shot, right? Put some type of plan in. Okay, the market's closed, I'm sitting outside or whatever. Here's my clear thinking, what I'm going to do if it goes against me, or will I scale? Put those thoughts down. And then maybe when you go back to it, because a lot of times, if you look like an artist drawing a picture, sometimes it's best to, like, when the position starts, you could just feel the paralysis analysis coming.
You can
just pull it. I mean, sometimes people say, why did you lock it? It was a bad situation. It's like I'm putting bad thoughts into this. Just take it. And that's why a lot of times, if you can't figure something with it, just take it off, take a breath, put that capital back to work somewhere else. It's just,
it's like dating the crazy girl in high school.
Yeah.
You can have fun, but when you're 30, you start thinking like, was this the right choice?
I like the analogy.
Yeah, I mean, it is what it is. So listen, I'm going to get out of it this morning. Otherwise, I mean, really, I might have to move my family in with you. So we're one day away, but
could you roll it at all, or roll it?
I'm not. Nah, it was such a short-term hit.
I
and I sized it appropriately. Yeah. I'm joking, obviously, but like, it was annoying though, because I'll tell you where it got me. We got down to, I got short around 67.20
in SPF,
or neutral when we dropped down to about 67.20, and we continued to go down, and that 20-point down was glorious. I enjoyed that. I scaled out of the short to get neutral again. So I was basically gamma scalping.
Yeah.
And a lot of times when I'm gamma scalping, I'll put the future on. I'll put the direction I don't want it to go. I'll do a future just to save theta.
Sure, I got you.
And then I'll do so I was kind of scalping it as I went, but we got to 6,700 twice and we bounced.
Yeah.
And what I was really playing for mentally was a break below 6,700.
Many were yesterday, but it wasn't the day for whatever reason.
It wasn't the day. And this is what's going to happen. I'm just going to go ahead I can't see the future, obviously, but this is what's going to happen. Today. I'm going to close this about 9:30.
Yeah.
And we're going to drop 95 points.
Absolutely. Would you expect anything less?
No. I mean, this is the expected move based on me closing. So.
Yeah. And gamma scalping, that's an interesting.
It's my favorite, Dan. I love it. And it's so hard to do.
You would have been a pit trade. I mean,
I know.
Gamma scalping was you could either get positive gamma or short gamma. Well, because the order flow most years, there's more sellers of options, or there are a lot of sellers of options, especially as the market goes up. So market makers would be, whether they didn't always want to, right? They would end up buying calls and then hedging it against stocks. So they might have a 2-to-1 ratio, maybe, for every, let's say if you're long 20, 50 delta calls, that's 1,000 deltas. And then you'd sell 1,000 shares of stock. So you have 20 calls and short 1,000 shares of stock. It's just like a long strangle or a long straddle. But I think where people enjoy that, gamma scalping lets us all feel like we're traders, right? Because it goes, you have a position, unlike a double calendar or a iron condor. If the market goes down, you get long deltas, boo. If it goes up, you get short deltas, boo. But the plus is you get positive theta. Gamma scalping, or a back ratio, is where it goes down, you get short deltas, good. It goes up, you don't have to pick direction, you get long. So you say, how do I lose on this thing? Well, you have something called, instead of getting positive theta, you have negative theta and long vega, but the negative theta will kill you, right? Just like a reverse iron condor
Absolutely.
that doesn't move. You're like, that's the quickest 40% down I've ever had in my entire life, right?
Absolutely.
Yeah.
I
Yeah.
mean,
But Troy, you need to talk these out, because negative theta traders, I'll tell you, they sing the blue. They can sing the blues, because it's like either euphoria or bad. Positive theta traders are just more make a low, it's not too crazy, right? But the ups and downs of a gamma scalper or a heavy reverse iron condor person, you're either singing the blues or you're really happy,
well, I mean, to continue my dumb analogy morning, like
to continue.
your long gamma guys, it's really hard to do without portfolio margin. So like, if you hear us talking about, like, I wouldn't even advocate doing it, honestly, without portfolio margin.
Without portfolio.
Just because of the sizing and stuff. But you can do it a little bit. It's just the cost basis for retail, is harder than I think market makers. Like,
oh my goodness, it's horrible.
Just the fees, you just eat you up.
The reverse iron condor is your closest, because it's reasonable capital, right? You're not putting up, when you look at the margin in a Reg T account for gamma scalping, it's stupid. I mean, what they charge you for that.
Yeah. So, I mean, but the analogy in my mind is like, long gamma guys, you're always bleeding, and then every once in a while you get a check for 10,000.
Oh, you want? Yeah, no. You're. Let me tell you, we had a guy that worked with us in the trading pits for the firm. His name was Donnie. He was one of the best gamma scalpers, long gamma I've ever met. He didn't like selling options. He didn't like positive theta, but he can. And we had a lot of these biotech stocks, and he'd be long a couple thousand calls, right? So let's say 2,000 calls, and then 100,000 short stock against it. So you'd have this graph, I mean, really steep. And the gamma was like every half dollar up, you're 10,000 long. So during the day, he would trade an incredible amount of stock, even if it had a dollar range. These might have been a $12 stock. If it goes up a half dollar, you sell 50,000 shares of stock. If it goes down a half dollar, he can scalp that. Now, they called it in the pit. Look at your goal for a gamma scalper was pay for your theta on a given day, and then wait for the big kahuna when you get the move. And then with biotech stocks, you would get the moves. But it's like your goal is in the morning, all they would discuss is, did you pay for your theta? The theta might be $5,000, and that was your goal. But when you think about it, you're making $5,000 just to pay your negative theta.
You're paying rent. You're just paying rent to be there.
Absolutely, you're paying rent. So it's a different world,
That's right. Yeah, I know. Well, listen, while we're on kind of technical things, I thought it's an interesting discussion. We had a lot of people. I was telling Dan earlier, whenever we do talk about new small account challenge stuff, I really enjoy it, not because of the product, necessarily trading cues or SPY or something like that, but because it gets people thinking in a way that they look at SPX and they don't sometimes. And so, Dan, do you care if I share? We're going to look at yesterday's trade again, and we're going to talk about a very specific thing that can happen.
Yeah.
Okay. So if you guys remember, this is Nebby's low side ord. Shout out Nebby. And what it's doing is, on VIX overnight moves down of, anything basically, you set a range between 9:30 and 10. And anytime between 11 and 12:30, if we go back below that range that occurred the first 30 minutes, you put this on. And what it is basically an iron fly, an at the money iron fly. It's a 5 wide at the money iron fly. And to show you, what that looks like, can you see this, Dan?
Yeah. No.
Okay. I mean, this is an iron fly. It's a bread and butter, iron fly, right? That's what you're looking for in the day. But what I thought was interesting about this is I want to go put this naked, okay? It's going to look very similar, right? But the reason I wanted to show you that is your strikes are 605, okay? So what that means in an iron fly is that if you hold this till 4 in Qs, this is an equity trade. It's American style expiration. If you hold this till 4, you will get assigned.
Mm-hmm.
You know, like one of these is going to expire in the money if you hold this till 4. And we had a really good discussion yesterday in the Discord. I didn't, but people did. And I remember, you know, there's some news traders talking about just the fear of it, of like, what does that mean to be assigned? Because it's kind of like the boogeyman.
It is.
In some ways. So I thought, Dan, it'd be interesting to just talk a little bit this morning, and this will be a shorter one, but it's okay. What happens when you're assigned? You've taught tons of people through the years. I know this has probably come up before. Walk us through what it looks like when you get assigned.
Yeah, and maybe like this is an iron butterfly, and maybe next just discuss a little bit like on a calendar, because it's a little different, right? Whereas like in this iron, but you know, and you're right, it's funny, you know, in the world starting, just a quick comment on, you know, a common strategy that people do, their long stock in their retirement portfolio, and their way into options, they'll sell out of the money calls, so covered right. And you think, especially that type of a trade, they're like, oh, I said, what's your biggest fear? Your biggest fear, their biggest fear is if it goes up, I get assigned on the short call. And I said, do you realize that, let's face the fear, and a covered right, you're not losing money, you're making money. That's a long delta position, long 100 shares of stock and short and out of the money call. It's all beautiful, right? It's beautiful. Now, yes, what would be the worst case in that situation? Not worse, but you get assigned in the short call, and that can knock out your long stock. And someone could say, you know, I've had the long stock since I was 14 years old, and the tax consequences, and my grandmother will kill me for, you know, getting rid of the stock. Well, I mean, in that case, you could say, look, first of all, watch the extrinsic value of the, you know, when the extrinsic, you know, when would that boogeyman exercise the call? And the answer is, you know, excluding a dividend discussion, when the extrinsic value disappears. And that's generally going to be when, on the short call, when it gets a little bit in the money and it's close to expiration, and you could buy it back, and you could sell another call. But in this iron butterfly example, which is interesting, is let's say we close over 605, right? So we close over 605, your puts are toast, right?
Yeah.
Your puts are nothing. And let's assume your long 610 call, right, Troy? Your long 610 call is toast. So all you have is this 605 call that's going to turn into 100 shares of, or whatever, depending on how many contracts, of short stock in the Qs, which you don't want to be. I mean, the worst case is you come in the morning, and the person from the brokerage firm, and they're all different, you know, you get 14 emails, you know, people spitting through the phone. I'm joking. And they're like, you got to put more money up, you know, because especially for a small account, they're like, you need another 50. No, I'm sorry, boogeyman. I'll just buy it back. I mean, and that's it. No, I'm not putting more money. This is a $3,000 account. I'm not putting 40 grand in for the stock. I'll buy it back. All right. But how do you avoid that? You avoid that by, you can see the extra, you know, obviously not wait till 4 o'clock or whatever, but watch the extrinsic value when that starts. And, you know, on expiration day, as you're getting near the end of the day, that extrinsic value is getting pretty low. I mean, it's pretty low. So I think, and it gets tough, especially in an iron butterfly where you're selling. The tough thing, Troy, is if you're selling the 605 call and put, it could come down to the wire whether it's going to be over 605 or under.
100%.
yeah, to me, a calendar would be easier to deal with, because with a calendar, you have a long out there, right? If you think you're going to get assigned, but even wouldn't even mind. I mean, let's take the worst case with a calendar. You get assigned on your short call, you come in short stock, you still have a long call out there, right? And worst come to worst, you could just sell out the long call and buy back the stock, but you got something. Here, you got the danger of coming in long or short 100 shares of stock, and if we have a big gap, but because you're selling at the money, this is more challenge, I would say, because you could come right down to the wire what you're going to do. So to me, and something like this, an iron butterfly, I mean, there's going to be low extrinsic value in the call or put. If it's kind of pinning towards that short, might have to just go buy it in, right? It's not worth it unless someone might say, okay, it looks like I'm going to be short 100 shares of Qs. Okay, that's going to cost me a lot more capital. I've got the money, someone's got the money in the account. I don't mind being long it. Forget about it, right? And then in the morning, or in the morning, if you want to sell something against it. But I would say close it, because for some people, Troy, I've seen it's almost like an incredible, the way people talk about it, it's like they got hit by a car downtown Chicago, right? And it's like, no, there's a very set thing, but watch the extrinsic value and buy it in. But the bigger issue is, to me, what the heck are you doing waiting till the end of the day to deal with something can get assigned? Why would you? You can't do that, right? Unless unless you don't care about the consequences. But I think that's why you guys do a lot with the automated or with the back testing, right? You'll have them exit at a certain time, and depending, it might be a little bit early, but again, when is the boogeyman going to exercise something? When the extrinsic value, when it's in the money and the extrinsic value has basically disappeared, right?
That's
but
right.
Do you want to gamble with that and say, well, I'll wait till there's only 1 penny left, the boogeyman, when there's not much?
Yeah. And there's, so people, this is good, because the iron fly is one of the more tricky ones. And so, Hal, you're right. Someone was talking yesterday about they got cases where they're assigned intraday. Let's just talk about this for a second.
Oh yeah.
American intraday, American options can be assigned at any point.
Absolutely.
If they're in the money. And the tricky thing is sometimes even if they're not in the money, but don't worry about that. The majority of the time is in the money. So at any point, you could look up, technically, this is just like real talk. It's you just turned 21. Your dad's having the talk with you. There, you have freedom, but there's responsibility. You could have this trade on and look up, and your brokerage, you have 100 shares instead of a contract. Either long or short. So I remember, I don't even remember what the position was, but I had a short call one time. It wasn't naked, but it was a longer dated. I had basically a diagonal, I think. Almost like a poor man's covered call.
Yeah.
That was what I was doing. Well, I got assigned Qs overnight, and I was short 100. I think it might have been 200. It's 2 contracts. And I did not have the money in the account to trade 200 contracts. I mean, I was a new trader, and it was terrifying. Well, I can speak personally. My brokerage, Tasty, was great. They were great. I called them. I got on chat, and they basically, they know what you can't do long before you know what you can't do.
That's right. Yeah.
And so they basically put or what happens is basically, if you don't have the money in your account and you get assigned, you're waking up the next morning, you have 100 shares. Let's say in this instance that it was an iron fly. So your short call, 50 delta call, we went up 4 points, or we went up $1. It wasn't enough. The long call didn't cancel it out. So you have you wake up the next morning and you are short 100 shares of Qs, your brokerage most likely is going to automatically close that first thing in the morning. Like as soon as they can, they will. And some brokerages you can do trading before market open, but worst case is at 9:30, they're going to close that for you. In this instance, it was actually, we were down a little bit on the day, so it actually worked in my favor, got lucky. But what's the big fear of it? The brokerage, there's two fears. One, you should not, like, there's a bad feeling when you wake up and your options buying power is negative $70,000.
Right. You feel bad. Yeah.
You feel bad. That's right. You feel bad.
Yeah.
And it's very, very scary. So if this happens to you, call your broker. That's the first thing I would encourage you to do. Call your broker as soon as you can and say, I goofed up. I should have closed this early, and you should have. And automation allows you to do that. And you should still monitor automation to make sure it gets out and all this stuff. You should do that. If you don't do that and you get assigned, you should call your broker, and they will most likely help you get rid of this. It's not, but the fear number two is anything can happen overnight. And so, on any given day, I think we're up 10 right now in ES futures. Well, that's $1. You might lose a couple $100, right? Worst case is something insane happened and you are in trouble, right? Like you don't have any protection. You basically are short 100 deltas on a small account, and if we drop 3% overnight, you're in trouble, right? Yeah. That's the fear. I'm gonna go big boy here for a second and give you some things to think about. And I'm not advocating to do this. This isn't financial advice, obviously, but just ways to think through this. Let's say you goofed up. You were on a day trip. You went hiking, and something happened. There's a blip with the brokerage. Something happened, and it didn't close, or it never got you set it in a weird way, and it just never got out. And you get home at 5 or 6, and you realize, oh crap, I'm assigned these shares, basically. I would encourage you to go ahead and start thinking through your account holistically about what that means and try to do the math. They're not going to show you. It won't show your brokerage usually. You need to assume per contract, you're short 100 shares of Qs in this instance, right? So what are things you can do? Here's just one idea. And again, it's not financial advice. There's a futures micro contract that you can trade, and they're very small. They don't require a lot of margin, but they trade overnight. I would look at the micro NASDAQ or whatever the symbol is that you're now. If this is an American option, I mean, you basically have to, like, if it's spot or if it's Apple or a stock, you kind of just have to, like, do the future. I mean, do SPY maybe or something like that, or do NASDAQ. But in this case, Qs, there's a NASDAQ micro future. And basically what you'd want to do is you'd want to get delta neutral. If you're 100 short 100, you'd want to try to buy as many as you can to make it neutral overnight. Dan, what do you think of that?
I mean, the first thing that came into my mind, especially for beginners, I mean, I think it's a great idea. I like that hedging. I mean, just to think how wonderful. You think of like the E-mini options, how you can hedge a position at night, and I think it's wonderful. But when you tell me, my first thought was thinking of the Three Stooges. Remember the Three Stooges? And I think of like a beginner person who, if they didn't close it and they allowed themselves to get assigned,
are they the type of people who are going to trade micro futures?
I don't want to. I just wouldn't want to watch.
I know.
Wouldn't want to watch that.
I agree.
They'll come in. I mean, if someone didn't think it was important to close, or even a notice to close an option that could get early exercise and that could have signed, and then you tell them to go into the futures market and hedge it. If they can pull that sucker off, right, I would be so thrilled. But I'd be too nervous to watch that.
I
and
know.
ask him in the morning and see if what are the probabilities of him doing that correctly. The other thing I want to say real quick is, remember this, folks. The broker's highly motivated to close your position.
100%.
Because when you have a Reg T account, if you do a calendar or a iron condor, you're putting up 100% of the risk. They'll get commissions. If you lose every penny in your account, you're paid up, right? They're fine. But when you, in a small account, get assigned on stock, now it's their risk because they're assuming you're not going to make them whole, right? I mean, even though most people would. And it really, in most cases, it's not going to be bad, but they're heavily motivated to close, and they know they have a report that comes up, they'll close it, right? They're not waiting. Don't think it's hesitant on, I can't find the phone number to call these guys, or I guarantee you, right? That's the Cajun cook. Remember him? I guarantee you. Yeah. By the time you find the phone number and you call up and you get them on the phone, they're done. Yes. I mean, they closed it. They say, hey, Joe, you know what? We saw that you were that. Basically, we ain't waiting for you to call us up. And because it's our risk now. Now that you stepped over the line and you cause our firm to lose money, you got an issue. But I think it's worth spending time on those hedges, Troy, because we have people doing that will hedge with the E-mini. And I mean, it's a wonderful tool once you get used to it, because you're right. I mean, to me, always the best thing with a mistake, to me, always in trading, I've seen people and they're just pure gamblers. They'll make a mistake. Well, let's see what we can do with this thing. Let's see what we can. I didn't mean to buy this car or whatever, but now that I got it, let's play. Right. And I'm like, if you make a mistake, get out of the mistake. I don't care, get out of the mistake. You didn't intend to do it. Get out of it. But I think the focus and the energy should be spent on, do you know if it's, a European or a cat, whatever the assignment, you got to know that before you trade. And two, if it is going to be something like Qs as opposed to SPX, you got to have something in your automation. You got to have something that you're getting out early, because as Troy said, a great point, I've seen options exercise and they shouldn't have got exercised. The bottom line is there's no rules on this. I can, if someone was, someone can exercise a call with $2 a premium and no dividend if they wanted to, right? I mean, they can do this. America, you can do whatever you want. But, if I'm short that option, I'm very happy that the person did that. But overall, you just have to, you got to close it at the end of the day. But yes, I think it's a good topic. I think people get so wigged out on these things.
Glenn has a good comment. His favorite law firm is Dewey, Cheatham, and Howe.
Dewey, Cheatham, and I love that.
That's a good one. That reminds me, I've always felt this way. Like, when I don't have to pee, I'm an American, right?
I hear you.
But when I go to the bathroom, I'm European. And when I really have to go to the bathroom, I'm a Russian. So these are the dad jokes of the day.
I'm staying out of this one. I'm staying.
Yep. Anyway,
I like that. I like that.
Yeah. Well, listen, I know there's nothing. Fear is a very strong emotion, and sometimes I would not encourage you to go through this, but sometimes you go through it. And so, if you go through it, the thing is, you really just have to think about it ahead of time, read about it, like study it, like Dan's saying, because, there was a story, and I don't remember all the details. There was a story a couple years ago about a kid. I think he was selling box spreads or something. I think he woke up and he was assigned like $100 million or something ridiculous, and 100,000 or something. and it was Robin Hood. He was assigned overnight, and he didn't know what to do, and he killed himself. Um,
Oh my.
yeah, it was a terrible story. And the sad part was he actually, I think, had long puts. He just didn't know how to trade options, basically.
Hmm.
And so you hear the stories, and they're real things. I mean, like, again, if you're selling naked calls, you have undefined risk,
Yeah.
right? So this is my kind of
Well,
don't sell naked. I
yeah.
mean,
And the other thing, Troy, is, I mean, another thing people can do if they are, I would advise this. I would say, look, before it happens, call today. Call your broker or the trade desk or whatever, and just say, hey, I'm relatively new. Each brokerage has sometimes slightly different procedures, how they'll handle that. And can you say, look at how does your trade, give me an idea how your, talk to the trade desk, talk to a customer service rep and say, okay, let's pretend I get assigned, I do this, talk to them about a trade you like, iron butterfly here. I get assigned on my short call. What happens? Do you wing out an email first, or will you close it? What do you do? Just to relieve some of the anxiety. They might say, you know what, Phil, what we do if you get assigned in queues, we're going to cover that first thing in the morning. Don't worry about it. Just
yes,
call us. You know, you literally don't have to do it, because technically, if the brokerage firm, if you're short 100 shares and they buy it in, you're fine. You can go back to trading, right?
right,
So they might say, and I think it depends on the person, right? That's why sometimes if you could get, like, if you're at Schwab, can you get someone on the trade desk, someone who's a little more familiar with options? If you get somebody who's a new rep, you know, they may give you the, did you read the policy? Did you read the
yes,
statement that
yeah,
we sent? You know, you want the actual practice. Here's what we're going to do. And,
yes,
and so I think that would be helpful. Call up, and they would be happy to walk you through it and take away some of that fear. But bottom line is, it's going to be okay. I mean, for the, it's going to be, sure, we can look at that worst case scenario, but there's a high probability you'll see the experience. You almost wish someone would go through it. You'll go through the experience, and then, okay, you can see, did they cover the stock? Yes, at this firm. This firm, no. They're sending me emails to put in more money, and I just went in and bought it back, or whatever. Or maybe they wouldn't let me buy it back, or whatever.
yeah.
So, but anyways.
And I think that's good advice. Definitely call them. Yeah, that's right, Rob. At Tasty Trade, you can call them, and they'll give you lots of ideas while looking at your account and help you work your way out of it. I have found that to be true. When I was a newer trader, I talked to a lot of people at Tasty, and they were always great. I and I'm sure other brokerages are like that. The other part also is, depending on how much money you have in your account. If you don't have a lot of money in your account, I mean, this is 10 years ago. It's me a lot. On a Friday, I'd be trading Tesla. They're going to close it out if you don't have the money.
That's right.
And so a lot of times they'll do it for you preemptively, because they're in the business of not blowing up. That no one wants you to blow up. I mean, people can say the brokerages are crooked or whatever. I can promise you that no brokerage wants you to blow up. That's not helpful to them.
Not
So,
helpful. No,
yeah. But anyway, I hope this helped. It's a good conversation. It should not. There are risks, but it should not deter you from trading if you're a new trader. These are knowable things, is what I'm saying. You can learn about what will happen, and they'll take you.
And one last thing, Troy, I would just reality right now, I'll look at, like Rob said, Tasty's great, right? So that's a fact. You can get someone on the phone, the number. But like when it's a little bigger firm, Schwab right now, would it be fair to say a little more bureaucratic, right? A little more, if you asked me right now, Dan, who would you call for an assignment? I have no idea. Years ago, right, when Tom Sosnoff and Scott Sheridan were there, you make a call, they got to take in, there's enough people, they'll take care of it. Here, I don't know. So if you're a Schwab, I would on a rainy day or a day like today, who do you call? Is there an assignment number? Even in a bureaucratic firm, they could say, okay, if you have a problem or here's the trade desk, or here's the secret Batman phone number.
That's right.
Get that number today, right?
That's right.
Call somebody, go through the drill, and that will take away anxiety that there's somebody, even in a a big firm like that, you can get hold of. You got the right department. I mean, because the most frustrating thing is like all this is happening, and it's going to be a crazy day probably. And on that crazy day, everyone else is trying to call, and you don't get anybody till the market's, an hour into the day. So
yeah,
do it ahead of time. Yeah, would be best.
Well, guys, listen, on that, we'll let you go. We'll be back tomorrow with some more ideas. Hope you have a good trading day. I got to close something out, or else I got to move in with Dan. So